So what is a consolidation? Consolidation is a fantastic principle of the market moving to the side with strong and visible and vivid support and resistance key levels. Now, the consolidation is often to be seen in many time frames. It does not have to be only the daily time frame. It can be the hourly or even 1 minute time frame. You will be able to see quite a few consolidations. And the consolidation is a process of perhaps either no trading at all, which can be seen at night or in the end of the day, or most of the time it can be a limit player position gathering. So that's why the limit player and the consolidation levels can be quite similar. And these levels you will see, the consolidation level, you will see very often after a powerful move. That's when the price is trying to decide where it wants to go and who's going to push the market where. And perhaps some traders might be waiting for action, and some are actually preparing for action and in the way of gathering big position for either climbing or falling. So here, let's move to the computer screen and you'll see that there is a powerful move, then a consolidation, a really small one though, then a powerful move, some consolidation, powerful move, a really super small consolidation, then a really powerful move, and then a bit longer consolidation. So this is pretty much a part of the move of the market and how market works in general, the physics of the market. The consolidation is inevitable, and it actually shows us that the market has slowed down. It's the stop after the powerful move, and then we might either continue the trend or we might change the direction and reverse the trend. So the consolidation is the turning point of the market, and it is quite fantastic to trade it. As you can see here, we have once again the same levels, the support and resistance. And if we go to the 4-hour chart, then you will see how great it has worked. Now, in this position here, it's a really powerful and vivid limit player, and so is here. It can be just one player or it can be two different players. It really depends on a scenario, and you will never be able to know this. And quite honestly, you do not even need to know this. All you need to know that in the time of consolidation with such powerful support and resistance key levels, somebody is gathering a position, a big player or players. And this leads us to the topic of how the market moves. And the consolidation is a great tool to be able to explain the actual logic of the market. As you can see here, we have so many bumps into this level, and then another one, here is one, then a really powerful false break, another hit, another false break, another hit, and another super powerful false break that generated an immense move down. Now, this is a very great example of explaining the logic and how the moves are being generated. Now remember, as I've said before, what moves the market the most? Well, the humans, of course, but what in those humans makes them do one or the other thing? And in general, with simple words, explaining it with one simple word is with fear. Because of fear, you see what you see in the market. And the fear is not necessarily something that they're scared of, like a dragon or a zombie or whatever, but something physically scary. No, it's the expectation. So if the traders used this support level and opened a long position and went into climbing, then this means that they bought something. Remember, if you're going into climbing prices or opening a long position, that means that you are buying. So if you buy something here and a lot of people bought something at this precise spot, this precise price, and this is what generated the up move. And here at this precise spot, at this level, is where the same traders closed their trades. Some of them might have actually closed their trades sooner right here, which actually maybe even in the very beginning generated a move down, and people would be closing their trades along the way. But most of the traders will probably close their trades somewhere around this resistance level, and this will be generating the move down, because closing of the long position means selling. So they are selling what they have bought lower down here, and this is the concept of buy low, sell high. And this is quite a great example of this simple and useless concept of trading. When you ask a trader what you should do to make money in the financial markets, the wise ass will say that you have to buy low, sell high. Well, yeah, well, this is pretty much what happens here. People buy low, sell high, and once they sell, they also, this down move is generated by two types of people. The people who sell off their investment from down here when they bought something, and also the people who are shorting the market, so opening the short positions. And of course, traders like me will do both. I will make money from the move up, and then I'll make money from the move down from this strong level. Now, and this is how the market moves. If a human, a trader or a banker, whoever, a human trader has a reason for anything, and here there is only one thing to do: close the position or open or short the market, so sell something, but never buy anything at this location. This is only logical. Therefore, it's more likely that the price will move down and that there will be an impulse of going down. And this is how the market works. This is what I call fear. The fear is basically the fear of the market not moving higher than this powerful resistance level. And that's all. And at this precise level, people will be selling off their long positions, closing their trades, and perhaps even opening the short positions, and in a way helping generate the move down. So remember that when a lot of people sell in the same spot, it will generate a nice impulse going down. That's as simple as that. And this is what is happening in between these two powerful key levels, creating a consolidation and giving traders an unbelievable amount of potential and chances of making money. Same thing here at this level. A lot of people sold off their investments and a lot of people shorted the market. So everything was for selling off either your investment or actually selling in a way of opening a position, which is the short position. So this generated the move down. Now it did not quite get to our support level, but that's okay. As I've said before, the impulse, it might be a really strong one like this, which the impulse can be super strong, just like this one right here, which actually broke through our support level with no break whatsoever. Or it could be a small one, like this one, for example, and make it to only the middle of the channel. The size of the impulse we might not know, but it's not possible, unfortunately, to know the size of the impulse. That's just not possible. Now all we can do is have a set expectation and, well, I don't like this word, but hope that our take profit will make it and we will make money. Now, of course, there are certain cases where if you would actually short the market using the false break right here going down, and your take profit would be right here somewhere below this long candle, this can happen. And then guess what happens? You'll be probably stopped out. And that's okay. That's part of this work. And there is nothing 100%. And sometimes you will be pissed because you would have 100 or 50 points on your side, quite a lot of money, and then you will have nothing and you will actually end up making a minus. That is okay. That's part of this work. And if you cannot accept losses just as well as profits, then there is nothing for you to do in trading at all. So yeah, in this lesson I showed you an example of a consolidation and what it means, this side move-ish activity of gathering a position and actually giving traders a bunch of fabulous opportunities to make money short term. But nevertheless, even though these trades would still be short term, they would still generate an incredible amount of income just because of the amount of points that the market nowadays moves. And you can have $100 per point, $5 per point, or $1,000 per point. And then on one day you could make 50 points, which would be $50,000. Now that's quite a lot, and you need to trade many futures to be able to pull this off, and the risk amount would be quite huge, and you would need to have quite a substantial depot. However, it still would be possible in the near future of yours, of course, not right now, not in the beginning. Now, all right, this lesson is coming to an end. Please don't forget about the test. Enjoy your homework, and I will see you in the next lesson.